Stocks advanced Friday after a mixed session in the markets, while earnings and inflation data remained the center of attention. The S&P 500 gained, and both the Dow and Nasdaq also closed out Friday's session in the green after a volatile trading week. However, at the close, the S&P 500 ended the week marginally lower after 5 straight weeks of gains, but the close was still only slightly below all-time highs. Although we have a market that continues to go up no matter what, there are still concerns. Perhaps that's why they call it climbing the wall of worry. One big worry is inflation. This week we had an inflation report indicating that prices are rising hotter than expected. The report indicated that consumer prices rose at their fastest rate in 31 years. In October, inflation rose by 6.2% versus the same month last year. That compounded September's already lofty increase of 5.4% year over year. However, according to shadowstats.com, if one uses the CPI formula from 1990, the inflation rate is near 10%. And if one uses the CPI formula from 1980, the inflation rate is closer to 15%. So feel free to pick your poison. But don't feel alone, because while Wall Street and the markets continue near record highs, the consumer sentiment is at an 11-year low. So what do the charts show now? Let's take a look. And now we're taking a look at the 1-year daily chart on the spiders, the SPY, and the close on Friday was 467.27. Now, here's what we have. We had the previous top there. We had the decline, the bottom, and the base, and then the move on up. We hit this record high at that point there, and right now we had a small pullback, but it looks like we might get a reflection and head on back up. We're going to have to watch that reflection here. I think the probabilities is that we might stall out once we get near that previous high. We might get above that, but I think there's a probability of a stall out. We'll take a look at that a little bit closer here. Let's go look at the oscillators. First of all, we have the volume. The volume is generally declining. And that's what's part of the problem, a little bit of a yellow flag. When you have a market heading on up, it's not necessarily good to have declining volume. So here in the MAC, we had the top at that point here. We had this decline, and now the fast line, which is black, is meeting right with that slow line, which is red. And I think we're going to get this reflection on up here. But it's once we start to get back to that previous high that we need to watch, because I think there's a probability that this might stall out with that declining volume. Now let's go back here in the April to May period. You see a similar peak at that point there, and it came on down here, met with this slow line. The fast line met with the slow line right here, but it continued on down. So this is somewhat similar in the current circumstance, except I'm expecting a bit of a reflection here. We didn't get a reflection back in that April-May time frame, but I think we're going to get a bit of a reflection and then the stall out. Moving on down here, you can see that the histogram shows we've been rolling over here for quite some time, and we've talked about that, and we're heading on down, and it doesn't really seem to be slowing, but I think my expectations are that we'll get that reflection, and you can see a reflection here in the price rate of change, and I think once this fast line, which is black, moves on up here, it's going to stall out at some point. Perhaps not unlike it did here in the April-May time frame. We had a move down, and then this little spike came up here, and I think that's what we're going to get, something similar to that, and then stall out. So we'll have to watch for that, but that'll be next week, maybe the week after. Here into the RSI, we're at a moderately strong 69.32. It's not really all that strong, but above the 50 or midline, there is strength. Into the stochastics, you can see that little fish hook here. We're heading on up. I think it might stall out. Same thing there in the Williams, and then back up here. Let's take a look at that relative strength one more time. So what happens is when the RSI gets above this level of 80 into that overbought territory, which it did back here in the April-May time frame, it basically lost strength and headed on down. I think that's what's going to happen here. We had a lot of strength up here, but I think it's losing its steam right now, and I think we're just going to head down. I don't think we're going to have a crash. I think we're just going to have a pullback up here into the price chart. And one last look at this, and you can see that we are having this reflection right here, but I think it's going to stall out. Now we go back here to this time frame. That was the peak and then the decline, and even though the MAC continued on down into this period here price wise, it wasn't much of a pullback. So I'm not looking for anything significant, only something that will help the stock market lose some steam, but then allow it to gather its strength again to make another move higher. So nothing significantly negative, just an ordinary run-of-the-mill pullback. And for today, that's ChewDog Charts. Thank you.